Welcome to ADT Sharda Bai Pawar Mahila Arts Commerce Science College Shardanagar Baramati. I am Professor Poonam Mishra, brought for you subject bookkeeping and accountancy, in which we are learning chapter number 11 1 Introduction to Partnership and Partnership Final Account. So students, now we are going to learn the format for the trading account, P&L account and balance sheet. We already know that from the given trial balance in the question, we have to prepare trading account, profit and loss account and balance sheet. So just let us understand that what kind of items or amount will be debited or credited in a particular account. So you already know that we have to prepare these three: balance sheet, trading and P&L, and the item in this account will be posted from trial balance. Okay students, so trial balance is a table from which we have take each and every item and post them into respective accounts where they should go for. Okay, so for example, if trial balance is there, and there will be the debit side and credit side. So students, the debit of trial balance will be debited only, and the credit of trial balance will be credited only. So debit item will be posted on debit side only, and credit side item will be posted on credit side only. And you know, liability is of a credit nature and asset is of a debit nature. So if debit side of trial balance something is there related to balance sheet, that will be the asset, and something which is related to balance sheet in the credit side of the trial balance, that will be the liability. So this basic rule you should remember, that the trial balance debit item will go in the debit only, and trial balance credit item will go in the credit only. Now we have to bifurcate that whether that item will go in the trading account debit or trading account credit. So students, please remember this shortcut. Trading account debit means we are going to use TD, and for trading account credit we are going to use TC. And then we have, if it is not going there, then we have to decide whether it is going on P&L account debit or P&L account credit. So we have created the shortcut PD and PC. And if it is an asset, that is in the trial balance, the asset you will see on the debit side and liability you will see on the credit side. So if it is an asset, it will go on the asset side of the balance sheet, and if it is a liability in the credit side of the trial balance, it will go in the liability side of the balance sheet. So this is the short form or abbreviation we are going to use for making the posting. So student, whenever you will get the trial balance, at that time you have to decide that each item of the trial balance will be posted only once, means only one time, in either of these three account means two accounts and one is a statement. Balance sheet is not an account, it is a statement. So whatever the item of the trial balance is there, that all will be posted in either of these three places: TD, TC, PD, PC, or assets and liability. So how will you decide, student, that whether I should post this item into trading, or whether I should post this item into profit and loss, and whether I should post this item in the balance sheet? So let me clear you. Production, so basically trading account is related to the production process. So whatever the production related activity, expenses and losses, income and gain is there, that all will be posted to the trading account. Production and direct expenses. Production expense is also known as a students direct expense. So don't get confused. If it is a production expenses and losses, and direct, or we can say the direct expenses and losses, that will be debited here. If it is a production income, what is the production income? Sales will be the production income, and any reward or any goods which is gone from the factory. Actually production is done in the factory, so I would like you to keep remember at least this one word, factory. Trading means factory expenses, factory losses, and factory is related to goods. Goods is related to production. So just remember these keywords, so you will be very comfortable while deciding whether it is going in the trading P&L or balance sheet. So trading account is related to the production expenses which is done in the factory and of the goods. So it is a direct expenses and income. So all production related, factory related, goods related item will be posted into the trading account. So this is the item which is given, students. Just you have to read it out and note it down in your notebook. If you have already noted, no need to write it again. If you have not noted, not written in your notebook, kindly write it down. In this, you know that written outward, purchase of goods, and then purchase return outward. Carriage is a traveling expense for the production process. So this carriage is nothing but the traveling. Freight is also one kind of traveling and convenience expenses. Dock charges means traveling charges. Custom duty for transferring goods from factory to somewhere else. The custom duty must be paid on whether it is going out of the state, then the custom duty will be paid. And the worker who are working in the factory or for the production, they will get the wages, manufacturing wages and salary. So these are wages means the salary, but salary is given to the office employee and wages is given to the workers who are working in the factory. So students, these are related to the production expenses, or we can say these are related to the goods. So these all expenses and losses will be posted on the trading account debit side. Trading account credit side, production related income is a sales, so sales only will be written here, and all other selling related thing will be written in the P&L. So just keep in mind this different. Then goods going from the factory, or it is lost by fire, lost by theft, or it is distributed, or it is lost in accident, or it is withdrawn by the partner. So any goods related, production or factory related, or we can say the direct expenses will be shown in the trading account. So you can see the further item is also given in trading account: import duty, coal, coke, gas, motive power, oil, water, grease, royalty, purchase, production. So royalty which is paid on purchase or production, which is related to the goods only, so that will also come on the trading account debit side. Primary packing charges, first once the goods is produced, the primary packaging is done in the factory, so that will be shown in the debit of the trading account. Factory lighting, heating, factory rent rates, factory insurance, works manager's salary, closing stock, the remaining stock of the goods in the factory, so all will be posted into the trading account. After that, student, we will know the pro forma or the format of profit and loss account. So basically, how will you remember this? It is a sales related expenses. You already know the rule, real and IPLG. So debit is always expense loss, credit is always income and gain. So I'm not gonna write expense loss, income gain. You just remember these words. Sales related expenses and losses will be shown on the P&L account debit side. Okay, so sales and office. So whenever the P&L word account, you will think about the P&L account, you will remember these words: sales related expenses and losses, sales related income, excluding sales, all other selling income, commission, discount, interest, that all will come on the P&L account. On P&L account is a recurring nature, so student, just remember this. Even the trading account also is recurring nature, so better you remember this word. Sales related expense losses debit will be shown, sales related income and gain credit side will be shown in the P&L account. And office related any expenses, so sales, office or administration, admin, so whatever the admin related, office related, sales related, income and expenses and losses will be there, it will be debited to P&L account, and any sales related, office related and admin related income and gain is will be credited to credit side of the P&L account. You can see student how the items are mentioned here: salary, wages. Wages is first and salary is later, then it will go in trading account. But the salary is first and wages is later, so it will go in the P&L account. So rent, insurance, electricity, telephone, printing, stationery, traveling. Okay. So in trading you can see the carriage and conveyance, but in P&L you will see the traveling expense of the salesman, depreciation on the assets, loading charges, audit fees. And on the credit side, commission received, discount received, interest received, dividend received, rent received, any miscellaneous small receipt or profit on sale of any asset. So these are the income and gain in the office and admin, so that all will be recorded on the credit side of the P&L. For you can, the list is very long of the P&L, all the repairs, renewals, entertainment expenses of the employee, interest on loan, conveyance, loss by fire, loss by theft, loss in accident. Some part the goods part will be shown in the trading account credit side, but loss part will be shown in the P&L account debit side. So use the shortcut PD. Okay. So commission allowed, discount allowed, allowance, advertisement, carriage outward. There was a carriage inward. Carriage inward means purchase related traveling, and carriage outward is a sales related traveling. So any sales related expense will be shown in the PD, profit and loss account debit side. Sales charges, bad debts, export duty, taxes, general expenses, trade, legal charges, professional charges, bank charges, solicitors fees. Secondary package means primary package is done in factory and secondary packaging is done in the sales office. So secondary package charges will be shown in the P&L debit. Loss on sale of fixed asset, all will be shown here. Last we have to see the balance sheet. So you know, balance sheet is not an account, it is a statement which shows the financial position of a business for a particular year. So in the balance sheet, the first item on the liability side will be the credit, after that the capital account, and then current account, after that the bank, all kind of loan. So, and then the current liability, small liabilities will be shown like bills payable, bank overdraft, sundry creditor, and then provisions for discount, outstanding expenses, provision for taxes, income received in advance. So income which is received in advance is not my income, it is liability, because I have not done I have not done anything to earn that income, I have to do. So now today that advance income is my liability, so it will be shown on the liability side. Asset side, you already know, goodwill, land and build, all fixed asset will be written first, land and building, then plant and machinery, furnitures, and after any adjustment of depreciation will be given, that will be deducted from the particular item. After that investment, and then all current asset will be written like closing stock, sundry debtor, and bills receivable, insurance claim receivable, cash in hand, cash at bank, partner's current account, debit, credit balance. If it is there, then it will be transferred to the asset side. So likewise, you have to know the nature of account, how it is posted. No need to remember all the items, just remember the nature, students. Now after posting, once the trial balance, you will see, you will make the posting of each item of the trial balance, whether in trading, either in trading, P&L or balance sheet, only one time. But the adjustment which is given below the trial balance, that all adjustment will have two effects. So students, remember, trial balance item will be posted once only, one time only, but the adjustment will have two effects. So two effects for all the adjustment is given here. If the closing stock is given in the balance sheet, so first effect is the balance sheet asset side, and second effect is trading account credit side. Outstanding expenses, some expense of this year is not paid. Outstanding simply means not paid. So some expenses is not paid this year, so that should be paid in the next financial year as well. So this year that outstanding expense is a liability for the business. So add the particular expense on the debit side of the trading and P&L. So whatever the expenses is pending, it is not paid, you will add that not paid amount into that item, and then the second effect will go on the liability side. It is exactly opposite. Outstanding expenses is exactly opposite of prepaid expenses. The expenses which is not this for this year, it is for future years, but I have paid in advance, so that is not my real expense for this year for my business. So I will deduct that item of prepaid expenses from my respective expenses item, and it is going in the first one is going in the liability. To this one, anything you will add in the expenses, your liability will increase. Anything you will deduct from expenses, your asset will increase. So the second effect will go in the asset side. Then income received in advance, it is, students, you can remember, relate to this by this. Income will be always in the credit side, but it is received in advance. So it is a advance income or prepaid income, we can say. So income, pre-received income, we can say. So income received in advance, it will be deducted. Any advance thing will be deducted because that is not for this year. So you just decide whether it is good or bad. If income is reduced, if it is not for this year, you will deduct it. If deduction is done from the income, it is a loss, and if it is a loss or bad thing for the business, it will go for the liability side. Income receivable, so any income which is outstanding, means it is your income for this year but it is not received, it is receivable, so it will be added. So if the income in added is if the income is increasing, it is added, it is going to be added, so it is a income or good thing for the business. So the second effect will go through the asset side. Then the bad debts. Bad debts means debts which is not recovered from the customer, or amount is not recovered from the customer. So this is a loss for business, students. So what can be the effect? Show to the debit side of the P&L account, it is a loss. So P&L account debit side, and deduct it from the asset, means customer will be reduced, debtor will be deducted from the asset side. Next is provision for doubtful debt. RDD means it is a preparation in case the debt will become bad, means bad debts will appear because customer will not pay the amount on debt. So that time, for meeting that risk, company maintain the RDD, reserve, for that doubtful debt, whether it will be recovered or not. So for that, the debit side of the P&L account, it is a loss for the business, student. So PD account, P&L account debit side, it will be shown, and it will be deducted from sundry debtors. Reserve for discount on debtors. So reserve for discount on debtor, it is just like an RDD, student. Again it will be deducted from sundry debtor, very similar to this one. And so this one was also shown on the debit side of P&L, it is also shown to the debit side. Simple, any reserve or any provision for the debtor is kept aside, your debtor will decrease because that item will be reduced from the debtor amount. So in that case, it will be the loss for you, because if your asset is decreasing, it's loss for you. If your asset is increasing, it's benefit for you. So it will go on the P&L account credit side. Depreciation, in you already know, at asset get decreases, so loss is there. So P&L account debit side will be shown, and it will be reduced from the respective asset from the asset side. Then interest on capital. So who contribute the capital? Partners contribute the capital into the business, and for that contribution they get the interest. So any interest on capital is which is paid by the business to their contributor, means the partner, is a loss for the business. So it will be shown on the P&L account debit side, but it will be shown in the partner's capital or current account on the credit side, because it's an income for the partner, because they have done the contribution for the business. So I would like to tell you that the business and the partners are two different persons, students. Treat the business separately from their partners. Okay, even though they are running the business, still it is separated because it has a legal status. So hope you understood the basics things, format, and this 10 adjustment. Please note it down in your notebook. Any doubt, ask me in tomorrow's Google Meet sessions, and we will have some practical problem solution tomorrow in online session. Till then, thank you. Bye bye.